All right, it looks like we've hit critical mass, so we're going to go ahead and get started. Thanks to everyone for taking time out of your day for joining us. This is a special version of our workshop series in honor of Financial Literacy Month, where we'll be talking about budgeting when it comes to student loan debt. Just a few housekeeping notes before we proceed. This workshop is being recorded, and everyone will receive a copy of that recording in addition to informational materials and resources after today's session. So you'll receive that via email about 24 hours from now. That being said, we have a smaller group on today, which is great because it means we'll hopefully be able to address any and all questions that you might have. So that being said, throughout the presentation, I encourage you to put those questions into the Q&A, and we'll be pausing periodically to answer any of those out loud. And then if you need to enable closed captioning or live transcription during the webinar, I'm going to be posting a link in the Zoom chat with instructions on how to enable this feature on your Zoom. All right, so a quick look at the agenda we're going to cover over the next hour. I'm first briefly going to introduce who we are at Savi and our special guest today, Amanda Monty from Penny Finance, who's going to be talking to you about budgeting specifically around your student loan debt. And then we're going to start off by just addressing the state of student loan debt. This is a complicated and overwhelming topic and a very political landscape. And so we're just going to, first start off by going over some of the basics and how much of a burden this is for so many Americans across the country right now. And then I'm going to turn it over to Amanda, who is going to talk through some of the tips and tricks around budgeting with your student loans. And then we're going to wrap things up by walking you through some of the resources available through both Savi and through Penny Finance to help you with this. And of course, we'll address any and all remaining questions before we wrap things up here today. So to introduce your presenters, my name is Lindsay Clark. I'm the Chief Borrower Advocate here at Savi. I'm a student loan borrower myself. I have a little over $200,000 in student loan debt. So if that makes any of you feel better about your own situations, then mission accomplished right off the bat. But I lead all of our educational workshops and webinars on a daily basis. And I'm excited to be with you here today. But I'm even more excited to introduce our guest presenter, Amanda Monty, the Chief Operating Officer of Penny Finance.
Hi, everyone. Lindsay, thank you for having me.
Yes, thank you for joining us. So just a bit on who we are here at Savi, in case you might be less familiar or this may be your first workshop. We're a social impact technology startup based in Washington, D.C., and we were founded by student loan experts and advocates who've been fighting on behalf of the borrower for almost a decade. And they developed Savi as a technology platform and a human service to help borrowers like you and like me not only better understand our student loans, but to navigate successfully from start to finish around some of these very complicated government programs. But along the way, our goal is to really make the experience of being a student loan borrower a better one, because I think we can all agree it's not great. And so we try to do that by identifying as much additional savings as possible through things like income-driven repayment plans and forgiveness programs like public service loan forgiveness. We're a registered public benefit corporation, which means it exists in our mission and charter to serve the public benefit. And that's exactly why we do things like this here today. We host educational workshops and webinars almost on a daily basis for a variety of our communities of borrowers across the country, because we firmly believe that when borrowers are better educated and more informed about their debt, they are more empowered as consumers. And I can certainly attest to that, and I think Amanda can as well. And I want to introduce everyone to Penny Finance. This is one of Savi's trusted partners, and they are also a social impact startup and company on a mission to close the wealth gap and get more people, especially women, who are disproportionately impacted by student loans. In fact, women hold 2/3 of all the student loan debt out there, is trying to get them out of debt and into investing with an accessible and affordable financial app. So Amanda's going to talk to you a little bit more about Penny Finance in just a few minutes. But first, we're just going to start off with a brief state of the union when it comes to student debt. And most of this will not be too unfamiliar to you, especially if you have student loans and are attending this workshop. Roughly 45 million Americans have federal student loan debt, owing a collective $1.74 trillion in both federal and private student loan debt. Now, borrowers between the ages of 35 and 49 hold most of this student debt. And interestingly enough, many people think the student debt crisis is a young person's problem, a millennial issue, when in fact, the fastest growing demographic of student loan borrowers is actually ages 50 plus. And it's often parents taking out loans for their kids. And that's what's called a parent plus loan. So that's the fastest increasing demographic of borrowers, which means it's impacting more and more people, spanning all age gaps. Now, here's another interesting thing. Over 6.1 million people have applied for forgiveness of some type. And close to 800,000 borrowers of those 6.1 million people have received forgiveness through the Public Service Loan Forgiveness Program. And about 930,000 have received income-driven repayment forgiveness. But again, what that goes to show you is that of all the people that have applied, a small fraction have actually received that forgiveness. And that's because of how complicated and administratively heavy and burdensome these programs can be. While they are well-intentioned, it's often really difficult for a borrower to navigate from start to finish successfully and actually reach that finish line on their student loan debt. So I think this is something that you are all probably all aware of if you've not experienced it yourself. And it's exactly why Savi exists. But today we're excited to bring in sort of another element here and talk about how managing your student loan debt factors into your budgeting as well on a month-to-month basis. So with that being said, I am delighted to turn things over to Amanda, who is going to kick things off around budgeting with your student loans. Amanda, take it away.
Thank you. Okay, next slide. Can I do that or do you do that? Woo, thank you. Budgeting.
I could use it if you want to click. Yes, click
Okay,
next slide. Yeah, can you see that?
I can see it, yes. Budgeting is really everything. And what I want to make clear is that it can feel overwhelming, and perhaps a lot of us have this traditional viewpoint of this really big Excel spreadsheet with a million things on it and focusing on every transaction coming in and out. And I would like you to just remove that from your brain. Budgeting is something that can be as simple as knowing what's coming in, what's going out from a generalized standpoint, with important factors that really move the needle, paying off student loan debt being one of them, and focusing on those larger categories, knowing what's left over so that you can live your life and make decisions. So think about it as just knowing your numbers. And I put this little sassy quote in here. Most people don't have a money problem, they have an avoidance problem. At Penny, I specifically meet with women and our members to help chit chat about what they're needing. And the stress and anxiety is so common. And what I've come to learn through moving through that process with them is most of them are financially okay. They have enough. It's just that they haven't looked into it. They haven't formed a plan. They haven't checked on their debt to know that they're paying enough. Once you get through this barrier of knowing those big numbers and the budget and what's going on with your life, it can, for many, remove some of that anxiety and out of control feeling. Next slide, please. I always like to start with money mindset. We don't need to spend too much time here. I just think that it's crucial that we understand there's a lot that lies behind how we view money. And we know the brain controls everything. And so there is this piece of the puzzle where if we have a lot of negative conditioning, think about how you were raised, who you were raised by, the lifestyle that they lived, how well they managed your money, it all helped paint this picture. Here's some examples of more like conditioning experience on the left-hand side. And in your own time, perhaps through years of therapy, quite frankly, we can start to rewire, reframe, and choose how we want to think about and manage our money. So we can move on from this, but keep this in the back of your mind and just understand our mental health and wellness is absolutely a part of this. Starting with budgeting, let's always start with our goals and joy. And specifically tonight, goals, example could be pay off my debt within 5 years, within 10 years. Think about these things that you know you would love to do or have, or certain freedoms that you would like to have. And then really get down to brass tacks of not materialistically, always and only, but what are things that you know within your life that truly bring you joy? And my favorite story here is walnuts. I am someone who does not make a lot of money, doesn't choose to, and didn't come from that. Walnuts, they're so expensive to me. And I would always refuse to buy them. They're too expensive. No, I can't do it. Well, the truth is, walnuts are so good and nourishing for me. They also bring me so much joy. So as we move through and you move through your budget over, this could take months, don't negate things that bring you joy. And instead of thinking, oh, I can't have them because I don't make enough, I don't have enough, whatever, think about how to fund them or shape shift money, pay less on something else to be able to have this. Because if we don't have future goals and joy, I think a lot of this can crumble, and the fun and the joy of actually what life means can get lost. Once you've done that, planning for the unexpected. A lot of people call it an emergency fund. To piggyback off of the importance of words, language, and the way the mind functions, we're going to call it an opportunity fund. Think of this as a savings account that sits in a high yield savings that you hopefully never touch. It takes an average of 3 to 5 months to solidify a new job. And this fund is meant to be there for you when the unexpected happens so you have something to fall back on. 3 months is a beautiful place to start. And if you don't have this at all, it can take time, because what we're trying to do is save some months worth of our absolute must pay expenses. And we'll get into this after. But we would suggest let's aim for 6, so that if a really big unexpected thing happens, loss of job is a big one, you have a cushion to fall back on so that we're not stressed or taking out more debt or using credit cards in a harder to manage way. And then as life grows, maybe you choose to have children, things get more expensive, your expenses increase. This grows too. But let this be a piece of the budget. Then we look at investing in retirement. A retirement account is a type of investing account. And if you go to the Penny Instagram, just posted some very funny language of like, can we please stop calling your retirement account a savings? A retirement is something created by the government for us to save money so that future us, when we're 65 or older, perhaps before then, if we're very lucky and plan well, have income to rely on to carry us until end of life. And it is the first order of business when it comes to investing. If you put money into a retirement account and you don't invest it, then it is not working the way it was designed to. Then it's just a fancy savings account. And to keep up with inflation, but more importantly, to have the option of either working less or not working at all when we're older, we need to be thinking about this. And there is so much to retirement. You might get it through an employer. You might not have that option. You could open an individual retirement account. We have tons of blogs, resources, and courses to help teach you. But here are some options when it comes to investing. And investing can be a scary word, and it all has some degree of risk. But there is a way to do it in a lower risk way by creating a diversified portfolio, meaning all of our eggs are not in one basket. And we have a calculator on our website that's free for everybody called the Money Quiz. It's there for you to help roughly back into, which is the number that will be a part of your budget. How much do you need to put into your retirement right now every month to have enough at 65? And what that number is absolutely varies by lifestyle, but roughly it could look like I would like to have $1.5 million to carry me from 65 to 90 or older than that. So we want to put retirement as one of those big ticket line items in our budget. And now we call it the mini budget method. How to look at it is, first and foremost, what is your take home pay from the jobs you have, the income you make, not before tax, after. What are you literally taking home, putting in your pocket? Then we subtract must pay expenses. It is your choice how specific you get. But again, we're trying to move away from that 70 million line item Excel spreadsheet because it's scarcity mindset and it's nitpicking and overanalyzing ourselves. Just a suggestion, if you're someone who that really excites you, by all means, run wild. But think about, no matter what, I have to pay these things: rent, cell phone, car insurance, health insurance, absolute must pay expenses. Then our debt payments, as well as the retirement contribution, equals your budget number. And the budget number is another way to say it is cash flow. How much money do you have after you take your money home, pay your must pay expenses, pay your debt, pay your retirement? And that cash flow is the money that you have left over to fund your goals and spend on what brings you joy. The beauty of a budget like this is, once you know these numbers and you map it out, you can then begin to toy and toggle with it. And Lindsay's going to get into a lot of what's going on with student loans and debt and payment. But when it comes to debt payment in particular, you want to log into your accounts, and the lenders might give you a monthly payment amount. And you want to double check that and ensure that that monthly payment on your student loans is covering more than the interest alone. So that not only are you paying off the interest accrued every month, but you're paying into the principal full big balance. And that number might be different than what the banks provide you. I personally feel, I also have student loans, they're getting really much better about this, about being transparent and showing you different payoff options, but please double check that. And if that number feels way too big and unmanageable, maybe temporarily we put less into retirement to help to cover that. Or maybe we learn, are there forgiveness or refinance options to lower that monthly payment? But if you haven't ever worked with a budget or you haven't looked at it in a while, put down the numbers just as they are. And that cash flow budget number might be negative, or it might be very close to zero. It is not to get overwhelmed. It is then to say, okay, now I know where I'm at, and now I'm going to start moving and toying with these other numbers, debt and retirement in particular. And if we're an overspender, of course, that's a different story. But then we start toying and playing so that ultimately we know our debt is getting paid off someday, not never. Otherwise, we're just lighting our money on fire. And that cash flow budget number is enough that we feel comfortable. And if we don't, we have two options: decrease expenses or make more money. But here is truly, in my opinion, the absolute foundation of life. And someone at our last budgeting masterclass asked, can you like do life without a budget? And my answer is absolutely not, because how do we know what choices to make in terms of the jobs we take, the way we spend money, the vacations we choose, if we don't know these numbers that are coming in and out? This is extra support. We Penny are here for you, Savi, at all times. You guys get a discount to our membership, and tomorrow you'll get an email that has that discount in there. But The point of Penny is that we're an online platform that is meant to mirror a financial advisor. We are very education focused because that's where sustainability happens. You learn the things, you know your options, you make your choices. And so then as life continues to unfold, you feel confident in knowing how to make hard decisions. And so we are always here.
Awesome. Well, thank you so much, Amanda. I certainly found that helpful as I struggle with budgeting, especially with my student loans, on a daily basis. And I'm now going to talk to you about some of the additional resources that are always available to you through Savi. And now you have the opportunity to take advantage of those through Penny Finance as well. And as Amanda mentioned, we're going to be sending you more information on how to do that in our follow-up email tomorrow. So most of you might already have a Savi account, but if you don't, I'm just going to sort of walk through, exactly how Savi works and how you can take advantage of the resources at your disposal. And it's really as easy as 3 simple steps. With Savi, it is one application where we're collecting the important information that we need to be able to show you a personalized repayment and forgiveness plan. From there, you're going to see those options all laid out for you so that you can make an educated decision on which option you want to pursue. And then we offer you the ability to enlist Savi in taking on that administrative burden and completing all of the enrollment and paperwork and applications, which can really be burdensome for student loan borrowers. Taking that all on for you. So digitally pre-filling those forms and submitting them on your behalf, whether it be for repayment plans or forgiveness programs, and then in monitoring those applications to ensure they achieve the desired outcome. So how do you apply for programs through Savi? Well, again, we're going to ask you some of those basic questions around your family size, your income, your employment, all of those, again, to help us identify that best repayment and forgiveness plan for you, which you see on the plan options page in your Savi account once you've completed that process. So you'll see here, this is someone who is eligible for the new Save Income-Driven Repayment Plan. They can see what that new monthly payment would look like, that total payment over time, how long until they'd be eligible to receive forgiveness down to the year and month, and exactly how much in forgiveness they'd be eligible to receive. And from there, you can expand below for more details and compare other plans that are available. But it really gives you an idea of what that outcome and best outcome would look like given your personal situation. You can kind of think of it almost like a TurboTax for your student loans, right? We're going to help you navigate through that. And from there, you can either choose to enroll in those programs on your own and submit those forms independently and on your own. Or again, you can enlist Savi's help through our Essential Premium membership. And that's where we really take on all of that administrative burden for you. So you'll see from that plan results page, you can click continue. And with the click of a button, you'll be able to create the forms necessary to enroll in programs like public service loan forgiveness. So down here on the bottom of your screen, you'll see this is an example of someone with 3 different qualifying employers for public service loan forgiveness, which means they'll need to submit 3 employment certification forms. And again, by clicking that Start ECF, we actually pre-fill and create that form for them. We have a DocuSign integration, which makes it really easy to electronically sign, even right from your phone. And then we actually send those forms out to those various employers to acquire those signatures and then submit those forms instantly through a digital fax right to the servicers. Again, this ensures that they're submitted quickly and accurately, free of human error. And from there, we're then able to monitor and track their progress to ensure they achieve the desired outcome. I'm sure many of you might have experienced this yourself, but these servicers, these federal servicers, these companies that are in charge of monitoring your loans on a day-to-day basis, and they're contracted by the Department of Education, they've come under a lot of scrutiny, especially recently, since the return to repayment last year, because of mismanagement of student loans. They haven't sent the right bill amounts to people. They've overcharged borrowers. They've incorrectly rejected applications. I would say from my experience in doing this for the last 6 years, the chances of someone filling out their form absolutely correct, no mistakes, their eligibility being, undeniable, the chances that that form is actually processed correctly and approved is about 50%. A program like public service loan forgiveness actually had a denial rate of 99% early on. And that's really because of a lot of the technicalities and clerical sort of hurdles that came with that process. So again, Savi helps to make sure that we get you to that finish line and that we're there with you each step of the way to advocate on your behalf and protect you from any bad outcomes. You can also see here on the right side of your screen an example of how we pre-fill and digitize an income-driven repayment plan application. An application is required to enroll in that program, and that's what's going to help lower those monthly payments. So again, we make that process really easy and so that you can go through your Savi account and pretty much get those things submitted in about 10 to 15 minutes. And that will mean starting to save next month. Can Savi help me with my loans? So yes, absolutely. Again, after entering your information, that Savi application is going to show you those personalized options for managing your student loans. And if you need personalized assistance, this is, I think, one of the best aspects about Savi is it's not just a technology platform, but it's actually a human service as well. And we have an internal expert support team with people just like me who provide one-on-one consultation and student loan support, at your disposal. So whether that be over the phone or email or chat, whatever your preference may be, you have access to an expert. And on top of that, when you do reach out to our Savi team, you are assigned a dedicated agent who will be with you on your case the entirety of that way. So that way you're not having to call and re-explain things to someone new, right? This is the same person that is going to know your situation and going to be your point of contact going forward. And one of the big things, again, that we can help resolve are any servicer issues. And I would say this is happening more frequently. We wish that wasn't the case. But unfortunately, these servicers are an irreplaceable part of the student loan system. You have to deal with them. And so our goal is really to reduce the friction that many borrowers experience with their servicers. Right now, the wait times when you try to call your servicer are anywhere between 1 to 2 to 3+ hours. It's almost impossible to get someone on the phone. And even if you do get someone on the phone, there's no guarantee that the information they're giving you is accurate or correct. I myself have been given wrong guidance, was forced into forbearances by my servicer Navient, and never even given the option to enroll in an income-driven repayment plan. So again, this is where Savi really steps in to make sure that you as a borrower are not only empowered, but protected when it comes to your student loans, and really making sure that you do achieve that best outcome possible. And when we say no concern is too big or small, we really mean it. Even if it is something like, you haven't heard back from your servicer about your application and you're just feeling a little anxious and want to make sure there's nothing else you need to do, or you get a letter from your servicer and you're not sure what it means or how to interpret it, you can forward that on to us and we'll let you know if there's any action needed. Or if it's something really concerning, you've been, charged an incorrect amount, or your servicer has wrongly rejected your application, Savi is going to be right there as your first call, when and if that does happen. And unfortunately, despite, our best efforts otherwise, it does happen more frequently than we'd like. So again, when it comes to accessing that one-on-one personalized support, you can do so right through your Savi account. You can click the contact support button. You'll be given an option to access our online help center. So that's got tons of great content, resources, and informational guides around these programs. And then you can send a message directly to our support team from there. It can be as simple as, I need help. Can I please get, schedule a call with someone? and we'll respond back and help you to set up that call. You'll also have access to the support phone number that you can call instantly as well. So again, if you don't have a Savi account already, you can get started by scanning one of the QR codes with your phone camera. But not to worry, again, we're going to be providing you with access to Savi and these links in the follow-up communications that you'll receive tomorrow. And just as a little preview, April is Financial Literacy Month, and that's why we are providing these special webinars. So today was the first in our series, and obviously this focuses on budgeting with student loans. Next week, we're going to have a webinar about saving for your future. And then the last week of April, we'll have a final webinar on protecting yourself from student loan scams. So if you want to register for any of these 2 future webinars, you can scan the QR code, and we'll also be providing a link in the chat as well. So to wrap things up here, let's briefly look at what are some next steps from today's workshop. First and foremost is going to be accessing your Savi account, right? That's where this is all going to start, where you'll be able to enter that information, see your best options. And then if you'd like to enlist Savi's help and receive that one-on-one personalized support, and for us to really handle all of your enrollment in these repayment and forgiveness programs, you can upgrade to that premium plan. It's called the Essential Plan at a small yearly fee. And from there, we'll complete all of your applications and get you enrolled in these programs so that you can start to experience that savings next month. And then you can create your budget with Penny Finance. And again, we're going to be emailing you with information on how to access their amazing resources tomorrow. And as always, if you need assistance or help or have questions along the way, again, you can log into your Savi account and click Contact Support to reach out to our team. All right. Well, that wraps things up. We are a bit ahead of time here. So I'm happy to answer any questions that I know Amanda is as well. If you have any for us, please feel free to stick around and put those in the Q&A. We'll keep it open for a few more minutes in case any questions come through. But we hope this was beneficial. Amanda, any final words or parting thoughts for our guest today?
Parting thoughts is I'm giggling to myself and thinking it ended early because budgeting can be that straightforward. And it really is that black and white. And I find that to be beautiful, a reminder. I just know it can feel so overwhelming when you're first starting out. And I really think the hardest thing is like logging into your accounts and remembering your passwords. And then secondly, figuring out that monthly payment for debt, that monthly contribution for retirement. Those are some of the hardest parts. The budget itself is easy, and that would be the closing theme. It's easy when you have support and resources, and that's why we're here. So that just feels so good, and thank you for inviting us on. Means the world. So please ask questions. Now's your chance.
Yeah, absolutely. You have access to, student loan expert and a budgeting expert. So please ask away. So I'm seeing a few come in. Someone asks, they joined late. Will the presentation be made available later? It absolutely will be. You'll receive a copy of the presentation and a recording in a follow-up email going out to you tomorrow. Someone else asks, if I will be eligible for PSLF, Public Service Loan Forgiveness, within the next few years, should I expect any repayment, or does it only wipe remaining payments? Okay, so if you are going to be eligible for Public Service Loan Forgiveness within the next few years, it basically is going to forgive the remainder of your student loan balance. Whatever, basically payments you will need to make up to that point at which you reach the 120 qualifying payments. It's at that point that the remainder of your loan balance will be forgiven and you won't have to make any additional payments. Okay, so hopefully that makes sense. Hopefully I understood your question correctly, but if not, please feel free to follow up in the Q&A. All right, Amanda, this one might be perfect for you. This person asks, is it better to pay off all of your credit cards before you buy a house?
Yep, that is the best question ever. It really depends on what is your credit card debt and interest rate and how long until you would have that credit card debt paid off. I would say definitely have a plan to ensure that you are paying your credit cards off. If not, there are resources like 0% credit cards. Make sure you have a plan. But when it comes to home buying, you want to be very careful if that you do not pay off all the credit cards or really any significant debt close to home buying, and specifically close to closing on that mortgage and closing on the house. Because when you pay credit card debt and debt off temporarily, it dings your credit and it will come back, and it's nothing to sweat, but you have a little bit of a time game to play. If you are in the process of home buying, I would just check with your lender and make a plan.
Oops, sorry, I was on mute. Okay, awesome. That was actually helpful for me because I've had a similar question myself.
Yeah.
All right, let's see. Another attendee asks, I have a lot of Parent Plus loans. I know I can only use an ICR or income contingent repayment plan. I have not made any payments yet and do not have the public service loan forgiveness option. Can I wait until June to apply for the income contingent repayment, or do I need to do it before April 30th? Stephen, if this April 30th sort of deadline, right, is really around consolidation. Now, if you have a lot of Parent Plus loans, the first thing that I would want to know is, do you have other loans that are taken out in your name from your own schooling? Meaning you have both Parent Plus loans in addition to loans from your own education. If that is the case, you're definitely going to want to make sure, okay, so no other loans, perfect, thanks for the response. So when it comes to just those Parent Plus loans, you're gonna wanna make sure that you consolidate those before April 30th, okay? That way you can benefit from something called the account adjustments that are coming up, in the next few months, all right? Even though you haven't made any payments on them, that doesn't matter. You're still gonna benefit most by consolidating before that April 30th deadline. So if you have not consolidated those loans yet, you need to do so first and foremost, because in order to even enroll in an income-driven repayment plan, specifically income contingent repayment, those loans need to be consolidated. So first step is going to be consolidating those loans. And again, this is something that Savi can help you to do. And then after consolidation, which takes about a month or two to process, during which you will be placed on an administrative forbearance. So you will not be responsible for having to make payments. After that, you can enroll in that income contingent repayment plan. Again, Savi can submit that for you on your behalf and make sure you get enrolled. And then you can start making payments on that plan from there. So I would encourage you not to wait until June necessarily to apply for the ICR, but first step being consolidating. And then as soon as that consolidation is complete, you'll be able to enroll in the income contingent repayment plan. If you wait until June, there won't be any issues. I would say, it really depends on when your loans went into repayment. Did they recently go, into repayment, right? Or have you not made any payments because you haven't been able to afford those payments? Because that's going to determine my answer there. And the reason being is that by consolidating by April 30th, right? What that does is it makes you eligible for these account adjustments. And those account adjustments are the Department of Education basically looking at your student loans and retroactively giving you credit for certain periods of time during which you might have been in a forbearance or deferment, right? Not making a payment, and actually awarding you credit for those periods of time as if you did make a payment. And it actually counts towards income-driven repayment forgiveness. So it's really in your interest to try to consolidate before April 30th to be eligible to receive those account adjustments. And then if you are enrolled in that income contingent repayment before June, that that account adjustment will automatically be applied to your account. So it's not that there is necessarily any issues with waiting until June, but it's just, I think, going to put you in a better situation to sort of maximize your benefit. And not to worry if you are unemployed. In fact, that's actually going to work to your advantage here, because if you are unemployed on any income-driven repayment plan, ICR included, that application, if you're unemployed, you don't need to attach any supporting documentation. You basically indicate that you do not have income, and you will automatically qualify for a $0 monthly payment. And that will lock that payment in for the next 12 months. So if you're unemployed now, the sooner you do that, the better, because if you do become employed at some point and you start earning income, then you will have to report that income when submitting that application, at whatever time that may be. So the sooner that you can consolidate and submit that application with no income, the better, because it will lock you in for a $0 monthly payment for a year. Okay. So that's really going to be to your benefit. All right, let's see here. A few more questions that came in. All right. So a lot of questions around consolidation. Someone asked, is it best for my husband and I to consolidate those Parent Plus loan payments? So if you have Parent Plus loans on behalf of a child and your husband also has Parent Plus loans in his name, okay, or if you're just referring collectively to the both of you, and one or the other of you has those Parent Plus loans, it absolutely is in your best interest to consolidate those loans. Parent Plus loans, in order to be eligible for any type of income-driven repayment plan and a program like public service loan forgiveness, need to be consolidated. So if you have Parent Plus loans, the first step is going to be consolidation. And again, that's something that Savi can help you to do. When you go through your Savi account, you're going to enter in that information and you're going to reach what we call the loan sync page, where you'll basically be able to sync your loan servicer account, whether it be Mohila, Navient, whatever it might be, to Savi. And that's where we're able to detect what loan type you have. And if you have a Parent Plus loan, we actually are going to flag that for you and then put you on that consolidation path and help you to consolidate before you do anything else. You can't enroll in any of those income-driven repayment plans until you've consolidated. So with Parent Plus loans, that's going to be the first step. And when it comes to interest rates on consolidation, consolidation basically is a weighted average of your interest rate. So it's going to depend on the loan amounts or the specific loan amounts and those interest rates that you have on those loans, but it's not refinancing, right? Which would be basically refinancing that loan at a lower interest rate and turning it private. Consolidation is a free federal process that doesn't check your credit or anything like that. But it's basically creating a new direct consolidation loan out of existing loans. You can consolidate one loan, you can consolidate multiple loans, but you can only consolidate once, okay? But again, by consolidating, you are basically creating a weighted average of the existing interest rates from your student loans. All right, let's see. A few more questions that come through. Someone asked, should everyone consolidate their student loans? And the answer is no, not necessarily. It really depends on your situation and more specifically, the type of student loans that you have. If you have a Parent Plus loan, or you have an older type of federal loan known as a FFEL loan, FFEL loan, these were loans that were dispersed prior to 2010, right? Those two loan types specifically require consolidation in order to become eligible for certain programs like income-driven repayment and public service loan forgiveness. And again, when going through Savi and syncing your loans, we'll be able to detect your loan types and tell you whether or not you need to consolidate based on those loan types. So that really is, the sort of scenarios in which someone would absolutely need to consolidate in order to become eligible for those programs. But otherwise, if you already have direct federal loans, right, and those loans are eligible for all the programs that we talk about, income-driven repayment, public service loan forgiveness, there isn't a need to consolidate those loans. And in fact, you might want to keep that, one consolidation card that you have as sort of a get out of jail free card for later on. Because one of the benefits of consolidation, besides making a certain loan type eligible for those programs, is that if you were ever to go into default in the future, okay, consolidation is basically a get out of jail free card. You can consolidate a defaulted loan once. Remember, you can only do this once, and it will automatically bring it back into good standing. So, if you don't need to consolidate based on your loan type, I would just keep that in your back pocket, right? Just in case, have that extra insurance in case something, happens in the future and you happen to go into default and you need to get out of default quickly and bring that loan back into good standing. All right, let's see. I think we got to all the question. Someone else asked, Amanda, this might be good for you. I'm planning on paying off a few of my credit cards soon, but my mom also wants to put my name on the house as well. So this might be follow up to the question that you were answering before.
Okay. I don't believe so, because I believe when you add your name to the house or to the title of the house, you're not taking on that loan or co-signing and buying with. So I do not believe that it should matter, but best practice always is whomever you're working with when you go through that process, ask them always because things change rapidly. So you can even call and inquire, but I don't believe.
Great, awesome. All right, let's see here. Lonnie says, awesome, thank you, Amanda. So thank you for that. All right, someone asked, signing up with Savi, will it indicate if I should consolidate? Absolutely, yes. That's one of the great things about Savi is that, it takes the guesswork off of your plate. And again, when you go through and set up that account and sync those loans, we're going to detect your loan type and will indicate if you need to consolidate and help you with that process from there. Okay, let's see. Someone asked, how can I get started, please? And which countries are eligible? So we are going to be sending you a follow-up email with links to access your Savi account, as well as the resources through Penny Finance. You can also scan the QR code on your screen. So again, look out for that email. We'll help you get started through there. As far as which countries are eligible, I'm not exactly sure if you're referring to which countries are eligible to take out federal loans. So, if you live in a country outside the United States, if you're eligible perhaps to take out federal student loans or take advantage of some of these repayment or forgiveness programs. And as long as you already have federal student loan debt, right? You are eligible to enroll in these programs, regardless if you may live outside, of the continental US. So we can still assist you in applying for those as well. All right, I saw another question come through. Someone asked, my husband and I took out Parent Plus loans. I will be retiring in May and spent 30 years in higher education. As a parent, would I be eligible for student loan forgiveness after making 120 payments, but in retirement? So this is a great question, Darlene. And I'm going to encourage you to definitely reach out to us because the timing on this might be critical. So it really is going to depend on whether or not you've consolidated that Parent Plus loan yet. But if you haven't, that's the first thing that you're going to want to do because those Parent Plus loans, right, they can become eligible for public service loan forgiveness. So if you've worked 30 plus years in higher education, I'm assuming, that higher education employer or employers were 501c3 nonprofits, as most of them are, and they are qualifying employers for that program. And with Parent Plus loans, it is based on, you, the parent's employment, not your child's. So for you, you would be eligible to receive full forgiveness on your loan balance of that Parent Plus loan under the Public Service Loan Forgiveness Program. However, you need to enroll or apply for that while you are still employed in order to receive it. So if we can make sure to get everything processed for you and those forms submitted before you decide to retire in May, that's going to be the ideal situation. However, if those can't all be completed before you retire, there is something called the PSLF buyback program, which the Department of Education just introduced in the last couple of months. And what that essentially does is for anyone who actually may be retired, but who has reached the 120 qualifying payments, it essentially allows them to enroll in that program after the fact. So there are sort of two different options that we could potentially pursue. But the great news for you is that you should be eligible either way to have all of that loan debt forgiven and sort of immediately. So we really want to make sure that you get enrolled in that program as soon as possible. So again, I highly encourage you, please reach out to our support team and they will be able to help you navigate each and every step of the way. All right, let's see here. Last few questions, I think, coming through. Someone asked, will consolidating affect potential interest forgiveness that may be coming down the pipeline from Biden? No, it will not. It absolutely will not. Consolidating again will make that interest rate a weighted average. But as far as additional interest that has accumulated on your principal balance, right? What we call capitalized interest. Any of that interest that has accumulated up to this point, and that might be canceled under Biden's proposal that was just sort of announced earlier this week, that wouldn't be impacted. You would still be eligible to receive that regardless of the consolidation. All right. Let's see. I think we got through all of the questions. If there were any that I missed, please feel free to reach out in the Q&A. But otherwise, Amanda, thank you so much. I think this has been super helpful. We appreciate any and all feedback from those that have attended and appreciate you guys sticking around. But if there aren't any other questions, again, last chance. But if you don't get a chance to ask now, I know it's one of those things where as soon as the webinar ends, that's when the question will come to you. Again, you can reach out to us at Savi through your Savi account and send us a message. And look out for an email in your inbox tomorrow with access to all these amazing resources, including the amazing folks at Penny Finance who are really helping to break down the overwhelming task of budgeting, working with Amanda. I'm going to schedule my own appointment with her following this. I think you guys all got a glimpse, of how nice it is to have someone break that down in a way that seems a lot less overwhelming. So again, really appreciate everyone coming out, and a huge shout out and thank you to Amanda for walking us through her budgeting tips. I know I found it helpful, and we hope everyone has a great rest of their day. Thanks so much, Amanda.
Thanks, Lindsay. Bye, guys.